Hello and good afternoon to all. I'm Suchitra Upare, coordinator for the FAO supported initiative, Global Network for Capacity Building to increase access of small scale fisheries to financial services. As you all may be aware, employment in the fisheries and aquaculture sector has grown faster than the world's population and faster than the employment in traditional agriculture. Fishing harbors, landing sites, associated processing facilities, wholesale and retail of fish provide significant employment and economic benefits to countries and the coastal communities. About 58.5 million population is engaged as primary sector workers within the capture fisheries and aquaculture segment. Again, of which 35% are employed in aquaculture, while 65% are employed in capture fisheries. Around 84% of the population is concentrated in the Asia region, and majority of them are small-scale fishers and fish farmers. So I would like to give a brief overview of the CAFI-SSF network. Okay. The initiative to establish the network was taken in 2019 during the expert workshop on guidelines for microfinance, credit, and insurance for small-scale fisheries in Asia. And this was co-organized by the FAO and APRICA, that is the Asia Pacific Rural and Agricultural Credit Association, based in Thailand. Representatives from the financial sector, government agencies, fisherfolk organizations, and civil society involved in financing to small-scale fisheries sector participate in the workshop. They welcomed and endorsed the CAFI-SSF initiative. The aim is to facilitate availability and access to financial services for SSF through strengthening the capacity of policymakers, financial service providers, and fisherfolk organizations. The network alignment is directly contributes to the international principles and guidelines, as you can see over here. Further to this, the network aims to support the integrated and economic development and contribute to the achievement of the UN's 2030 Agenda of Sustainable Development Goals, particularly focusing on target 14B that states provide access for small-scale artisanal fishers to marine resources and markets. Coming to the scope of work of the network, it's to increase global attention and awareness amongst the financial service providers to support the SSF sector, support the design and development of training materials and user-friendly financial tools that may support the sector and the communities. We also provide advisory services to concerned stakeholders. This also includes if we have to negotiate with the governments to also ensure that, any policy formulation that is beneficial for the SSF sector can be designed or implemented. And further to emphasize and promote partnerships and joint initiatives. Now, what do the organizations achieve by being a part of the CAFI-SSF network? Is we support to and help them to understand the unique business characteristics of the SSF sector, adapt their institutions to address the sectoral challenges. There's a learning that they can gain from the regional experiences, the success and the challenges that are faced by the sector within different regions, and also obtain support from other network members in how to implement financial services programs in support of the SSF. So here I would like to present the structure of the network. At the global level, we are supported by the CAFI-SSF Secretariat, which is headquartered in the Rome office at FAO. And I, as a network coordinator, coordinate between the steering committee members as well as the regional working groups that are currently being formed. So at the regional level, we have various working groups in the regions. Currently in 3 regions, we are creating the regional working groups in Asia, Pacific, Africa, and Latin America. And we have two regional partners at present in Africa, which is Africa, the African Rural and Agriculture Credit Association. And in Asia, we have Africa, which operates in about 24 countries, and all the association members of Africa are also members of all the which are financial institutions and microfinance institutions in Asia Pacific region. They're also our members. Coming to the how the network provides support to the stakeholders, we have shared the subjects identified in the project cycle of finance and insurance programs to which we do contribute, right from situation analysis when it comes to even demand and need assessments for the SSF sector as well as financial service providers. We do capacity building need assessments also, and currently we helped our one of our Africa regional partners in supporting a study on capacity building. Stakeholder analysis is also another area, as well as cash flow analysis. Also, we do help to support our member organizations. Then coming to the design part of it, we help in product, process, or developing policies also. Then the preparation of training tools and dissemination materials that can be beneficial for the FSPs as well as the fisherfolk organizations and various other members. We also implement program management as well as we provide operational or technical support to organizations. And finally, the evaluation aspects also. The mechanism for coordination of the network is currently we have a social media LinkedIn page through which we share most of the information with all our members. We also have an email database that we have created where we send information or dissemination material. The other areas where we do dissemination is through the regional partners' websites as well as the Rural Finance Investment Learning Center website also, where most of the information about our activities is archived. I would like to share some of the achievements of the CAFI-SSF network within this last year and a half. So we organized more than 8 knowledge sharing sessions for our member organizations. And you can access this on the RFILC event page. Here are some of the broad areas and thematic topics on which we organized the webinar series, and it was highly appreciated by most of our member organizations who found it beneficial. To the extent some of our member organizations who wanted to form farmer producer organizations also benefited from the information sharing that we tried through these webinar series. Then we've also supported a baseline study to assess financial and insurance services in Africa and developed case studies for financial institutions that provide services to SSF in 2 countries, that is United Republic of Tanzania and Zambia. Currently, we are completing, and we have supported and completing a study for the Bay of Bengal program to prepare marine fisheries insurance program for the government of India. And we've also contributed in preparation of brochures under the Blue Finance Guidance Note series published by FAO on microfinance and insurance for small-scale fisheries and aquaculture insurance for small-scale producers. Um, I would like to share who can be our CAFI-SSF members. So it's a broad categorization that we have kept right from fisherfolk organizations, financial institutions, government organizations. When it comes to government organization, it's not only just national and subnational, but also provincial or even municipal authorities also can be a part of our network, and research organizations, non-governmental organizations, and INGOs also. So the success of the network eventually depends on the experience sharing and the expertise that is provided to the by the members to other network members within the groups. Now, coming to why do fishers need microfinance and credit? So these are the broad areas how credit and microfinance and fisheries can contribute to this sector that have been stated over here, which also includes operational costs, the fishing vessels, repair maintenance costs, which is required, the replacement or repair of the gears, and the equipments, which includes navigation, fish finding devices, or refrigeration equipments that are required. And coming into the small scale aquaculture, it's the uh, credit and microfinance need is for seed, feed, as well as equipments, pond equipments that is there. So just to elaborate more on this, we have identified the potential credit needs in a very broad sense, both for the SSF fishers as well as fish farmers, and also the life cycle needs of the fisher households, which is also equally important. And microfinance services can be provided. So there's a balance not only for the income generation needs, but also for the life cycle needs of the uh, communities. So the broad five categories under which the services can be provided is the marine fisheries sector, which has an entire gamut of requirements. Then we have the aquaculture sector, which includes right from fish pond construction and purchase of feed seeds, and not only pond culture, but it is also free flowing water bodies like ponds, reservoirs, or canals also. Then coming to the coastal aquaculture, the broad categories that where access to microfinance can be provided. Then there is the post-harvest value-added product preparation and as well as the marketing support. So in these two categories, that is the post-harvest and the marketing support, the major contribution is also by women folk, which are actively participating in these activities. Then finally, not to neglect, it's also the consumption loans, right from the children's education to marriage, or even funeral purpose loans are there. So eventually it takes these kinds of services are for the entire life cycle needs, as I was talking about. Further to this, I would like to share the status of microfinance sector worldwide. As you can see, about microfinance services are there are 140 million borrowers with a loan portfolio of US dollar 124 billion right now. I mean, this is based on 2019 data by Convergence. And India is the leader in the microfinance sector. Second is Vietnam, then followed by Bangladesh, Mexico, and Peru. Again, over here, South Asia region dominates the global microfinance sector with a borrower base of 85.6 million people accessing these kinds of services. And the demand still continues. So what is different between the Southern Asia region and the other regions is the penetration of the microfinance services is within the rural areas, whereas in the Latin America region, it is found that the penetration of these services is congregated more in the urban areas, and the outreach is limited within the rural areas. Again, coming to the microfinance portfolio region-wise, there is a disaggregation in the data, and there is no, you know, absolute figure that we have, but an estimated figure is that SSF services, our maximum outreach is only 5 to 10% of the microfinance portfolio goes to this sector. Here, I would like to now share the existing models for provision of microfinance services for the SSF. So broadly, there are four models which are popular. So the first is the Grameen model, which was originated in Bangladesh. And this is a five-member peer group organized model where membership is open to people from the same village as well as sharing the similar economic resources and background. The group members themselves perform the loan appraisal, and access to loans is only in a phased manner over here. So how it works is initially first two members can avail the loan, while the remaining members still have to wait for about a few weeks because it depends on the repayment history of the first two members. And once that is assessed, the next set of members can avail the loan. So, and also the other thing is the repayment methodology over here is on a weekly basis. So by and large, this model does not really suit the micro or small scale businesses to an extent. The other model is the village banking model, which is again a community-based credit and savings association, where minimum 25 members come together and maximum it can go to 50. In certain regions in Africa, I've also seen there are more than, even 60 or 65 uh, people from low income areas who come together, or low income groups come together for this to assess the village banking resources model. Then further to this, how it operates is these members establish their own bylaws, distribute and collect the loan payments on their own. There is no collateral, of course, in this model that is needed because the group acts as a guarantor for each of the individual. The next is the joint liability model, which consists of it's a small group of 3, 5, or 7 members each. And the group again acts as a guarantor for each of the individuals. Loans are approved in this model based on the group's credit worthiness. And this model is popular amongst the micro and small enterprises, are, which um, which are growing fast, or individuals who are willing to grow fast in their business or are growing their businesses in fast manner. Coming to the self-help group bank linkage model, this is again a group methodology. It's an innovation, I would say, in the microcredit segment, and it has good outreach in the poor as well as the marginalized communities. The characteristics of this model is again a homogeneous group is there with people from the same village and also similar economic and social backgrounds come together to form the group. They have a participatory decision-making process, and again, there is no collateral. The group acts as a guarantor for each of the members. So this is one of the models which has been successfully implemented and has also scaled, and it also has the potential to be replicated in other regions. For 3 decades, this model has been in operation in India, and in a country like India, where it has about 28 million fisher population, um, so who have actively taken have participated and have availed the benefits of this model. So how it works is the SHG bank linkage model. Here, the bank does not directly go for group formation. The bank's role is only to provide loan to the groups and monitor the repayment process. Whereas between the banks and the group, there is a intermediary, that is either it is an agent or a non-governmental organization, which supports and creates the group formation and the link and the linkages to the banks of this group. For about 6 months, there is initial handholding by this group, which by they help the group in um, developing a savings habit, helping them to open an account in the bank, create discipline amongst the group members, help them in bookkeeping and record maintenance of the group. So after 6 months, the bank assesses the credibility of this self-help group and sees how much of a loan based on the savings amount that they have accumulated and the kind of savings habit or the discipline that they have followed. The bank provides a loan to each of the group members. So the other model, similar to this, where a financial intermediation is there between the bank and the self-help groups or the individual or the joint liability group, is through the microfinance model, where, as you all are aware, that there are several microfinance institutions that operate across various regions, and they also have the capacity and capability to provide the services to the last mile geographies. So the bank here lends to the microfinance institutions based on their capital, and the microfinance institution further offers the groups at the same rate of interest, but plus there's a microfinance institutions transaction cost also that is added to that. So this is also one of the popular models, and it has been implemented in several Asian countries also, as you all can see from the state of microfinance sector. And it does benefit to an extent for provision of services to the SSF sector also. Now, here I would like to share a case study from Asia. This was done in Vietnam. It's under a project aquaculture development through microfinance support in the northern uplands of Vietnam. And this was done in three upland provinces, that is the Hao Binh, Son La, and La Chao. The aim of the project was to reduce poverty and enhance local food security among the poor ethnic communities through microfinance support to small-scale aquaculture development. The first step of this project was to strengthen the local capacity of the poor and organize them together in about 50 pilot groups within these communes. The approach of the project was to enhance the productivity of these small-scale aquaculture enterprises by introduction of appropriate aquaculture technology, establishment of effective extension services, and innovative commune managed by the credit and the savings scheme. The key element of this project was assigning women the lead roles in creating these commune groups. And these women were mainly those women who were practicing small scale or backyard aquaculture activities. So the women unions at the commune level, district level, and the provincial levels also played a key role to bring together groups and organizations involving in microcredit schemes. And about groups were called aquaculture credit groups of 20 members each were formed, and eventually 50 commune groups were formed together. So as you can see over here, the number of women borrowers is quite good. And coming to the repayment or the loan recovery rate also has been almost close to 100% over here. Besides that, the number of poor borrowers that were covered under this project, as you can see over here, is also substantial. So I would say that such kind of programs are certainly beneficial for the SSF sector. And as we clearly can see that if there are women borrowers, the recovery rate is also equally good. Coming to the provision of how insurance services can be provided for the SSF as well as the small scale aquaculture producers. So I would like to give you all an overview of the last decade of the global insurance market, which has grown at a compound annual rate of 2.7%. And in 2018, the gross written premiums were US dollar 5.2 trillion, with non-life insurance contribution of 46%. This also includes capture fisheries as well as aquaculture segment. Again, over here, Asia is the fastest growing market in terms of the gross written premiums, with the growth potential for the coming years lies specifically within the liability and the agriculture business lines. China and Japan are the largest insurance markets in the world. So here are the key players in the SSF insurance programs. As you can see over here, this also includes agents, that is non-governmental organizations also are a part clearly over here. There are mutual associations, self-insurance pools programs, fisher cooperatives and associations who also play a key role in facilitation of the insurance programs for the SSF. So here I would like to share a few options for providing insurance to small-scale fisheries. One is certainly the traditional model, where insurance companies offer coverage on commission basis, then through brokers. The other is the partner agent model, where public sector or private companies collaborate with local institutions, that is a fisherfolk organization or a women's organization, or even a microfinance institution or an NGO to distribute its products and services. Then is the mutual insurance, where it is the insurance company is owned by the policyholders. What the policyholders mean over here is the fishers themselves or the fish farmers. The main purpose is to provide insurance coverage for its members, plus related activities that are aimed at reducing or mitigating risks, such as providing assistance in case of emergencies or accidents also. Coming to the cooperative or the community-based model, this model operates an insurance fund on a non-profit basis, and fishers pay insurance premiums and receive benefits. The other model, which is gaining popularity in the fisheries and aquaculture segment, is the parametric or weather-based insurance model. This model is popular in the agriculture sector, but is currently being piloted in this sector. So how it operates is a government purchases weather insurance from an international insurer, and the payouts are channeled to insured through Ministry of Finance in case of natural disasters. And there are predetermined triggers regardless of damages suffered. I would like to share two case studies. One is about mutual insurance scheme, which is very well structured and effectively implemented in Japan. And as you're aware, has also the largest insurance market in Asia. So how it operates is the national insurance policies in Japan are an integral part of the country's disaster countermeasure policies under the Fishery Accident Compensation Act. The coverage for all types of operations that includes capture fisheries, aquaculture, even hatchery or breeding units, or any other fishery-related activity is offered only through a fishery mutual insurance scheme. And all the fishers and fish farmers, it is mandatory that they become members of the cooperatives at their village level. So this scheme is managed through a three-tier system, where at the village level, the fisheries cooperatives operate this. All the fishers are members of these FCAs. And at the district or the prefecture level, the fisheries mutual insurance associations manage the mutual insurance programs. And at the national level, the central government supports the system by provision of subsidies and provision of special funds that is available for rehabilitation from disasters. Coming to the next example for the case study, it is in China, where a cooperative commercial insurance model is in operation. And how it works is a shrimp farmers cooperative has gone into an arrangement with Accent Agriculture Insurance Company, where the insurance company provides insurance services to the cooperatives. And further, the insurance company incentivizes best management practices. So if the members practice best management practices and the cooperative shows that the loss ratios are 60% or below, the shrimp cooperative is entitled for a bonus. So the shrimp cooperative, what it does is, in turn, it provides technical support to the insurance company. Also, it helps to identify and characterize the risk hazards related with shrimp farming and provides that information to the insurance company. It also helps in assessing the risks and damages whenever it occurs. So this helps the insurance company in the technical matters and identification of the hazards, whereas the services are directly taken by the cooperatives and further provided to its individual members. So but what I mean over here in terms of the win-win partnership is at some point, the shrimp farmer cooperative brought its loss ratio level up to 53%. So based on the agreement, this was certainly below 60%. So the insurance company promptly, as agreed upon, paid back the premium amount of 7% that was paid by the shrimp farmers cooperative back to the cooperative. And the cooperative further distributed the premium payment, which was returned by the insurance company to all its members. And the shrimp farmers, when they received that returned premium amount, they they were able to buy the seed, feeds, or other equipments that are essential for each of their individual farms. And all these shrimp farmers were small pond holding farmers. So this is another very good model that can be scaled and replicated, particularly where small scale fishers or fish farmers are small holding pond. They have small pond holding, sometimes even up to 1 hectare or even lesser. Further to this, I would like to share recent publications of FAO that are related with aquaculture insurance as well as provision of financial services. Also, we at CAFI-SSF have published few documents in association with our regional partners that are also listed over here. And lastly, I would like to say that we at CAFI-SSF Network have the knowledge and technical expertise to effectively support capacity building and awareness materials for financial service institutions and staff engaged in provision of services for the SSS sector, as well as the Fisher Folk Organization also we are willing to support, as well as other NGOs who are interested in doing capacity development for their staff as well as the institutions. And this initiative is at all the levels, local, national, and regional levels, to increase the access of small-scale fisheries sector. So thank you so much to all for the patience to listen and giving your time to us today. You can write to us at CAFI-SSF network, and you can also join our network. Currently, the membership, as I told you, is free for all the institutions. So thank you once again.